Hi everyone, welcome back. Retirement is a time that many of us are looking forward to hopefully one day be on the beach and sipping pina coladas and Capri Suns. No, but seriously, retirement is something that is on most people's minds, and there's a lot of confusion out there of what you should and shouldn't do, or what is good and what is bad advice. So in this video, I'm going to be talking about retirement accounts. Yay, a lot of fun. But there's a lot of confusion surrounding retirement accounts, and there's a ton of information out there on what retirement account you should get. If you should get a 401k or a Roth. But I'm not here to talk about that. I'm here to talk about what actually goes into these accounts. So in this video, I'm going to give you my single favorite option to put inside of retirement account. Yes, I do have a finance degree, but no, I am not going to be a finance guru and tell you all the little knickknacks you can do to save an extra dollar a year. My goal is to keep it realistic and find the best single option for a mass amount of people. But here's the real reason I'm making this video. I've seen a ton of videos here on YouTube that are recommending retirement tools that yes, they do look good on paper, but I think there are some serious pitfalls in their strategy. And I think it's due to the fact that investing has become easy. Austin, if it's so easy, why aren't you a millionaire yet? Yeah. But what I mean is in the past couple of years, investing has been relatively easy, especially right after the pandemic. If you don't include last year's returns, you could basically blindly throw a dart at the board and you would make a crap ton of money. In fact, they even had monkeys doing this, and the monkeys did very well. Heck, even the last 10 years have been so great for investing, and that's awesome, but I think the last 10 years of great returns have kind of skewed the way we think about investing. And I think the real problem here is greed. Now, I know this is not going to be a super popular opinion with the gurus out there who want to squeeze every last penny out of their expense ratios, and they want to check on their retirement accounts every week. My advice is not going to make you the next Warren Buffett, but if you only want to choose one thing in your retirement account, this will be my pick. And if you're a finance wizard, this will not be the pick for you, but if you want something that you can just set it, forget it without worry, and it's still going to give you great and safe returns, then this is for you. What's really cool about this recommendation is it makes sense if you're 50 and looking to retire soon, or if you're 20 and you just opened up your Roth. First, we need to discuss what makes a good investment for retirement accounts. And first up is diversification. Diversification is defined as the action of diversifying something or the fact of becoming more diverse. Who made these definitions? But anyway, diversification. Let's pretend you have a basket, and that basket represents your retirement account. Well, now if you only have one stock in your basket, you are not well diversified. But if you have hundreds of stocks in your basket, well, now you have a well-diversified retirement account. What you don't want to do is pick your two favorite companies and then start building a retirement portfolio off of that, because then it will open up the door to just a bunch of risk. Hypothetically, let's say you only have Apple in your account, and then Tim Cook announces that they are now stopping the production of the iPhone, and now they're deciding to use all their $50 billion of cash and to start potato farm. Well, I can't imagine investors would like this, and they're going to sell all their stock, taking your retirement portfolio all because you didn't know that Tim was a potato guy. But seriously, being over leveraged and not diversified can wreak havoc on your portfolio, because if you only have one company or maybe just one sector, then one bad decision you could lose your whole retirement. That brings us to risk, which personally, I think this is the most important part of building a retirement account. When I was in college, I made a ton of just stupid, risky investments and did the whole stock day trading thing. Surprise, surprise, yeah, it didn't work out. Everything was just so risky and I lost a ton of money. So if you take it from my experiences, less risk is always better. So now when it comes to investing, risk is pretty much at the forefront of my mind consistently. Now, one unique thing that I view retirement is your risk should be on a dynamic scale. So if you are younger, it's okay to be more risky, but if you're older and you're closer to that retirement age, you really don't want to have much risk. I'll explain this more in depth later, but I think it's one of the most important and overlooked parts of picking out your investments in your retirement account. And to wrap up, what I think is the most important part of choosing retirement accounts is going to also be a low cost structure. This is one that I wish more people had a little bit better of understanding. Often there's money left on the table, and when I think of something like a mutual fund, the first thing that comes to my mind is there's a little genius from Harvard that's behind a computer moving my money around and in the stock market making me a ton of money. But what you don't realize is little Harvard man has been racking up all these fees. And it's these fees that's the reason why index funds have actually outperformed actively managed mutual funds. So low cost and low fees are essential for building a retirement investment. All right, so now it's time for my favorite and the easiest recommendation for retirement accounts, and that's target date funds. specifically the Vanguard Target Date Fund. So what are target date funds, Austin? Target date funds is an all-in-one option that automatically adjusts a mix of stocks, bonds, and other assets based on the date that you want to retire. This is what the fund does. You buy the fund from Vanguard for the year that you would like to retire. So let's say you want to retire in 2060, you buy the 2060 target date fund. This fund will be well diverse in stocks, bonds, and short-term reserves. So in the beginning, it's going to be like 90% stocks and 10% bonds because stocks are more risky than bonds. But what's great about this is as you start getting closer to retirement, the fund will automatically start selling your stocks, buying more bonds, and then when you are closer to retirement, the fund will be more favoring those bonds because the bonds have less risk to them. They actually call this a glide slope, and it really helps eliminate a lot of risk. Let me tell you why this is off. And this is where I'm going to start disagreeing with a lot of what I've seen on YouTube. I've seen a lot of YouTubers recommend buying S&P 500 funds or total stock market indexes, and they show you historical returns, and it makes a lot of sense when they describe it to you. But in my opinion, they are starting to get greedy because not only do you have to constantly be monitoring your accounts, and I wouldn't call these recommendations well diversified, and it also opens you up to a tremendous amount of volatility risk. Here's where I'm going to start connecting everything. So let me paint two different examples. One example, you only have stocks and market indexes, and the other you have the Vanguard Target Date Fund. This is going to be an extreme scenario, but it's only to prove my point. Let's say the money that you want to retire with is $1 million and you are very close to retiring. Well, the date is February 19th, 2020, just days away from the COVID crash, which was not predicted, might I add. You are high on life, investments have been doing great, you can't wait to retire, you have this ugly blue Mustang that you want to get. Well, now the market crashes in less than a month and the stock market is down 35% and the date of retirement has come. So let's take a look at what the two different accounts look like. Well, person number one who took the YouTuber's advice and bought all S&P 500 indexes and nothing else, now their $1 million account is only worth $650,000. And they have to question if they're going to be taking out withdrawals because they know that this is the money that they have to live the rest of their life on. Well, person number two that subscribed to Austin, listened to his video on how people are becoming too greedy in retirement accounts, and well, he bought the Vanguard Target Date Fund and his account is down to only $850,000. That's still significant, but that's $200,000 more that he has. My point is the target date funds, they protect you as you get closer to your retirement age by automatically rebalancing your account as you get closer to the retirement benchmark. And it's going to take a bunch of that volatility risk off of the table when you're at the most vulnerable part of your life. I'm actually doing this exact process right now with my parents because I'm afraid that there's some possible turmoil coming and I want to be able to protect them from losing what they've worked so hard for. And that's why I'm ultimately making this video, because I want to hopefully help other people understand how target date funds protect you when times become so vulnerable and volatile. Now, of course, you can do all this fund management on your own, but I think a majority of people just want to buy something, set it, and forget it without any worries. This is not the only benefit that comes from these funds though. Aside from automatically controlling your volatility risk, this is also a well-diversified fund. The fund actually incorporates a lot of the Vanguard funds, which are known in the industry as some of the best funds that money can buy. Inside are funds like Total Stock Market Index, Total International Stock Index, Total Bond Market Fund, and Total International Bond Funds. It's just so well diversified that I just can't think of a better use of money besides maybe buying a crypto guy's course. You would wonder for all this engineering and constantly managing would be so expensive, but no, it's not. Sure, it'll be a little bit cheaper to do all the work yourself, but the Vanguard fees are only 0.08%, which is actually quite good for the industry. And really, that's why I like the Vanguard target date funds, because even though there is so many different companies that offer target date funds, no one comes close to how low of fees Vanguard charges. They all do the same thing, but more money in your pocket is always more good. And if you are interested in putting the Vanguard Target Date Fund in your retirement account, I will leave a link below to learn more. I'm not sponsored and the link does not pay me anything. I just really want to help. As far as buying the fund, it's as simple as picking the fund that corresponds with the year that you want to retire. I'll keep the cons of the Vanguard Target Date Fund short because honestly, it's a good product, but people often refer to target date funds as too conservative, that they should be more aggressive, and I have already kind of covered this. I think advice and the overall nature of us humans have become too greedy. I think a big correction might be necessary to change people's behaviors but hopefully I'll reach a few people this video and probably hopefully convince them that it's worth taking the risk off the table. And the other common con target date funds have is they are too expensive. And that's correct. There are some that are just too expensive. But the Vanguard fund is only 0.08% expense ratio, which is quite cheap. It's not even close as being expensive as some mutual funds that are around a 0.5% range. But there really isn't too many bad things to say about the Vanguard target date fund. Like I said, if I only had to pick one thing for my retirement account and wanted to make it as easy as possible, this is what I would have in my account. Now, personally, I do hold other things in my retirement account, but I want to make a video to highlight this tool and how possibly this can educate some people. If you think I earned your like, I would really appreciate it. It helps it go to more people. And if you want more related content to finance, please subscribe. I don't want to see you lose money, and I appreciate your time, and I will see you on the next one.